Shopify Capital is a funding program designed to provide eligible Shopify merchants with quick access to capital to grow their businesses. Unlike traditional loans, it largely bypasses personal credit checks and instead focuses on your store's performance. Imagine you're running a thriving online store on Shopify, but you need an influx of cash to buy more inventory, launch a new marketing campaign, or invest in better equipment. Going through a traditional bank loan can be a lengthy process with strict requirements. This is where Shopify Capital comes in. It's a faster, more flexible alternative specifically tailored for Shopify merchants, offering funding as a lump sum that you repay based on a percentage of your daily sales. The calculation process explained for beginners. Shopify Capital's calculation isn't about a traditional interest rate. Instead, it revolves around a fixed borrowing cost or factor rate and your store sales performance. Here's a breakdown. Eligibility and offer generation. Shopify uses its sophisticated system to analyze your store's data. This includes your sales history, consistency, volume, how long you've been on Shopify, your customer engagement, dispute records, and compliance with Shopify's terms. Based on this analysis, if you're deemed eligible, Shopify will present you with one or more funding offers. These offers are pre-qualified and typically non-negotiable. Understanding the offer. Amount advanced. Principle: this is a lump sum of money Shopify is offering you. Fixed borrowing cost or factor rate: this is the fee Shopify charges for providing the capital. Is a fixed amount determined at the outset or is represented as a factor rate, e.g. 1.1, 1.13, 1.2. If it's a fixed fee, let's say you borrow $10,000 with a fixed fee of $1,500. Your total repayment will be $11,500. If it's a factor rate, if you borrow $10,000 at a factor rate of 1.2, your total repayment will be $10,000 asterisk 1.2 equals $12,000. The borrowing cost here is $2,000. Total payment amount, total to remit: this is simply the amount advanced plus the fixed borrowing cost. This is the total amount you are obligated to repay. Remittance rate, daily payment percentage: this is a percentage of your daily sales that Shopify will automatically deduct to repay the capital. This rate is also determined by Shopify based on your risk profile and sales history. It typically ranges from 8% to 17%. How repayment works. Instead of fixed monthly payments, Shopify Capital automatically deducts a percentage of your daily sales until the total payment amount is repaid. This means on days you have high sales, you repay more. On days with lower sales, you repay less. If you have no sales, you don't repay anything that day. This offers flexibility that many traditional loans don't. Shopify tracks your sales from all channels associated with your Shopify account: online store, retail locations, other sales channels, and apps. The remittance percentage is applied to the gross daily sales, including taxes and shipping. In essence, Shopify Capital calculates your repayment by adding a fixed fee or applying a factor rate to the amount you borrow, and then it automatically collects a small percentage of your daily sales until that total amount is fully repaid. Before accepting a Shopify Capital offer, carefully evaluate your store sales trends and profitability. While the flexible repayment is a major advantage, ensure that the fixed borrowing cost makes financial sense for your business and that you have a clear plan for how the funds will be used to generate enough additional sales to comfortably cover the repayment and grow your business. Remember, even with flexible payments, you're still obligated to repay the full amount plus the fixed fee.